Okay, we're on. Mickey, good morning.
Good morning, Jack.
So, Mickey, you just got back from the PDAC show in Toronto, right?
I did. I think the attendance was probably affected by virus scares, but once again, it's always a boisterous conference.
Absolutely. So, what's the buzz? Like, what are what's hot in the industry now? What do you think are going to be the big themes of 2020? Like, what's everybody talking about right now?
Well, certainly the virus, as we all know, it's going to affect the world's economy. Already has. I mean, we have a 10-year treasury at an all-time low, and that's directly connected to the virus. But I think it's going to be gold, this story of gold now. Gold is a safe haven during times of financial distress and calamity and uncertainty. So people flood to gold. I saw yesterday, Jack, that the gold ETFs are at an all-time, or let me say that differently, they're at a high since 2012, and that's when we were just coming off the all-time high for gold of about almost 1,900 an ounce.
Now, I think I came across, it might have been an old or recent interview you did where I think you said that you were buying gold last year, but right now, are you waiting for a pullback right here?
I generally buy gold on dips, so this is very shy of a dip. Tell you the truth, I probably own enough gold right now. You know, I'm one of these physical bullion in your physical possession sort of guys. I don't buy ETFs because then to me that introduces third-party risk and defeats the purpose of owning gold. So at this stage, I'm not buying gold, but certainly if it comes off, I would consider buying gold. At this stage, I would say that silver is probably a much better buy than gold. And I can give you the reasons for that if you're interested.
Absolutely. But I just want to say I actually I was speaking with another newsletter writer. We were talking about this, the gold. Peter Leeds. I was speaking to him, and I mentioned to him there was a famous tech analyst. He was a semiconductors guy. And all of a sudden he got into gold. He said that once he held it in his hand, he understood what it was all about.
You mean like this?
I'm actually, Mickey.
Did you see this?
In honor of
there you go.
Of our interview.
Very nice. American Eagle there, Liberty, and so this is a 2-ounce gold nugget from northern Mexico.
Did you dig that out yourself?
No, I'm a buyer of nuggets, so I collect nuggets. As a geologist, lots of people are mineral collectors, and I tend to collect gold nuggets. That's my bailiwick. So.
Absolutely. No, there's really something about it. It's impressive. It has the heft. It's beautiful.
Absolutely. It's nothing like it, and hasn't been. I mean, from the dawn of history, man has valued gold. There's something about that bright yellow color that transfixes the human imagination.
You're a poet. I think I heard was it Robert Kiyosaki called gold God's money. Because that's the original currency that we know from
right. I think it's the only real money. So everything, all this fiat we spread around the world is just government's promise to pay, and we know how good those promises have been in the past, and certainly in the present and going forward in the future.
So let's talk about God's other money, which is silver. Why do you think silver will do better than gold?
Well, I go directly to the gold-silver ratio. And this morning, before our video here, I calculated it. I calculated it yesterday. It was 96. The gold-silver ratio this morning is 97. We have an immense Excel database of commodity and economic metrics. I went back and our database, and since 1970, just before Nixon took the U.S. off the gold standard. So we have 50 plus years, 602 months of data now, and only once in that entire period of time has the gold-silver ratio been higher, and that was in sometime in the winter, late winter of 1991, and it was 97.3. And the reason it was then was silver was trading for about $3.50 an ounce. It was really depressed. So silver's got some catching up to do, if you will, and it will catch up. The average and the mean and the median, let me put it that way, since 1970 is about 55, the normal gold-silver ratio. So at some point, silver is going to catch up. And I'm going to tell you it's going to go to 55 very soon, but it's really out of whack right now.
Okay.
Let me expound just about another 30 seconds on that idea. So gold is real money. Mm-hmm. Silver is poor man's gold. It's really an industrial metal, but it does have precious metal characteristics. So the idea is you buy silver, and then when the ratio gets more normalized, you turn all your silver into real money, which is gold.
Got it. Okay. Yeah, I remember. I started off my career when I was a kid in the futures markets, and at the COMEX. And I remember that gold silver
predecessor to the CME. So.
Yeah. And I remember I worked in the platinum and palladium futures pit.
Mm-hmm. Wow. Yeah. Interesting.
I remember that ratio. Now platinum is really
that ratio is at all-time lows right now, the platinum to palladium ratio. I haven't calculated it since last week when we did our Friday market review, but it was at 0.35, and that is completely abnormal. The mean on that's probably about 1.5 platinum to palladium, so it's totally skewed, and so I'd be buying platinum. In fact, I did the last time I really bought substantial amount of precious metals was about a year ago, and I bought platinum coins.
Okay. Yeah, I mean, I was thinking of the platinum gold ratio. I mean, platinum was like that's gone.
That's crazy too. It's at an all-time low last week, and I got these numbers off. I'm a bit of a numbers wonk, and I got them in my head because we do both monthly and weekly market reviews for various entities, including Kitco.com. So these numbers stick in my brain. Last week, the platinum to palladium ratio was 0.35, and I don't know what it is today. It's probably gone up a bit, but that was by far an all-time low for that ratio.
What's before we get into like the other stuff, what's your like target on gold and silver for like let's go 18 months?
I don't really do those sorts of things. I would be surprised unless this coronavirus really wreaks havoc with the world economy. I'd be very surprised if gold goes to 2,000. Back in the day in 2011, when gold was on such a roar, I was one of a few people and stood up and vehemently stated that gold would not get to 2,000, and it didn't. So I'll stick with that until I'm proven wrong, and then I'll admit I'm wrong and say, wow, 2,000 gold, I'm pretty happy with that. That makes me gives me a lot more assets in my portfolio than I had at 1,681.50 as we speak right now.
Okay, so you're actually you're a gold guy, but you're not that bullish on gold. You think 2,000 is the roof, kind of.
Because we've never gotten there before. Okay. We've actually never closed above 1,900. All-time close was 1,895. Okay. If we do go to 2,000, I don't think we want that, because that means that the world's economy is in a real world of hurt. Our stock portfolios are going to be way down. The U.S. Probably going to have to lower interest rates again. I mean, we're at we just lowered a and we don't have that much more to go. We absolutely do not want negative interest rates
everybody
in
else
the
is doing
U.S. like the rest of the world is. I mean, if you buy a 10-year German bond right now, they're going to give you back less money when it matures than you put in. That makes no sense at all.
Yeah, it's
who would be buying German bonds? My God.
but wait, Mickey, you know what they said the same thing about the 4-minute mile. They said it couldn't be done.
I'm not saying it can't be done, Jack. Oh, trust me. But I don't think we want that.
You don't want it, right. You basically, what you're saying is you don't want to live in a world of $2,000 gold.
Yeah, that's exactly right. I mean, if I do, I'm prepared. I'm a bit of a survivalist type. I own what I need.
Right.
There's a bug out bag at the door, but I don't want that. I absolutely hope that never happens in my lifetime.
You want to live in
But
civilization.
I'm a Boy Scout.
Right.
I'm always prepared.
Were you an Eagle Scout?
No.
Okay.
I quit at Cub Scouts, but then I went to the woods and did it on my own.
Okay. Excellent. So what are some of the other themes that you're looking at? Like, are you bullish on uranium, some of the battery metals? What else is interesting for you?
Well, uranium's always of interest to me. It's gonna boom at some point. Can't tell you when. We've got some market items in play right now that is preventing uranium from breaking out. But trust me, when uranium breaks out, we will do very well. I'm a long-term holder of U.S. uranium producers and developers as a core positions in my stock portfolio, and I'm just waiting till the breakout. It will happen. It's really going to occur when U.S. utilities got to go back to the market for long-term contracts. It's a very opaque market. We can't tell you when that's going to happen, but it will happen.
Okay. Yeah. Do you think that uranium is could be considered a good way to play like the electric vehicle boom, because these things will need if we shift to electric cars, which is obviously going to happen in the next 10, 15 years. Massive demand for electricity.
For people that live in metropolitan areas, probably, but for people like me and live out in the boonies in the western U.S., not so much. But uranium is the only source of baseload electricity that does not have a gigantic carbon footprint. So if we are going to transition out of fossil fuels for baseload electricity, and that really is coal and natural gas, then the only obvious source is uranium. And, you can't, the sun doesn't shine, even in the sunniest parts of the world, like where you live and where I live, the sun still doesn't shine for at least 12 hours a day. And I don't know in the Las Vegas area, but certainly in New Mexico, we get about a 70% of available sunshine. So what do you do at night? Well, you're not collecting solar. And at this stage, we don't have storage capability to store electricity. There's nothing on the horizon. Same with wind power. Even in the windiest parts of the planet, the wind doesn't blow 24/7. So uranium is the obvious choice for baseload electricity. In the U.S., 1 out of every 5 people that turns on a light switch supplied by nuclear power.
Now, how are you say that's a core position. How are you, what are some of the uranium stocks that you like?
Well, I own 3 uranium stocks. I own Energy Fuels, which is listed on the New York American Exchange. It is the largest U.S. producer of uranium, and it's well positioned to increase that. I own Uranium Energy Corp, a past producer developer in South Texas and Wyoming. And then I am a very early founding shareholder of a company called Sarga Uranium, and they have a development project in South Dakota and some in Wyoming too.
Okay, so the first two are producers, and the other
That's
ones.
And then the third one's a speculative stock. It's listed on the Toronto Venture Exchange and OTCQB in the States. Asarga AZZ is the symbol. The other two are listed on the New York American Exchange.
Okay. How do you feel about Cameco?
Cameco, Tech is Cameco.
Cameco.
I think
Cameco.
Yeah, that's the giant Canadian fully integrated nuclear power company from mining to markets. It builds reactors, etc. Cameco is kind of the big bellwether stock for uranium. I tend not to play those sorts of stocks. I'm a bit of a resource nationalist, if you will. So my choice is for uranium, at least, is U.S.
American made.
Yes. Yeah.
American made uranium. So what about how do you feel about some of the other battery metals, lithium and the other stuff?
Yeah, I'm not very much into those. Those are generally bubbles. I probably, besides gold, the metal that I'm most bullish on is copper.
Copper.
It is the real electric metal. You can't transform electricity. Everything we do, all the way from your light switch to transformers that sit at boosting stations all over the world, requires copper transformers. So since 1900, the yearly growth of copper has averaged annualized 3.4%. We don't see that changing. There's 85 million more people on the planet every year. 25% of the world is still not electrified. So there will be great demand for copper going forward. Most of those 85 million are in Eastern Asia and to a lesser extent at this stage, sub-Saharan Africa, and Eastern Asia is very rapidly becoming electrified.
Okay, so that's a good that makes a lot of sense. That's a good bullish case for copper. So let's I want to kind of get into the the real part of it, which is like your investing strategy. But I know before we got started, you like the word speculator, not investor, which I appreciate that. So first, let me ask you, how did you come up with this name, the Mercenary Geologist? I love that brand. It's a great, I'll tell you why in a second, but how did you come up with it?
Okay, well, it's catchy. Most geologists are mercenaries. I had 30 years in the field as a prominent geologist, field geologist, before I became an analyst in 2007, 2008, launched the brand then. So a mercenary is someone for hire, and most geologists are for hire. We don't really have regular jobs. We go from contract to contract, job to job. We boom when the metals markets boom, and we hunker down when commodities are not in favor. So I've been a mercenary geologist for a long, long time.
You're an adventurer and a speculator.
Yeah, I would say so.
You're like a cross between, was it the Jesse Livermore? What is it? The famous, adventures and a speculator.
Yes.
Yeah. So now you say there's I think I've heard you say that there's only 200 good projects in the world.
Actually, 200 to 300.
200 to 300. Okay. Now I think you favor explorers versus producers generally.
Yeah, because the miners historically have not been profitable. They generally, and I'll speak directly to the gold miners from 2003 till 2015, we've done all the numbers. The world's major gold miners did not generate enough cash flow to meet their obligations. So what do? They do equity raises, or they take on debt to pay dividends. They just, it's all follow the money, cash in versus cash out. So, in arguably the greatest bull market that we have ever seen, the gold miners did not perform. They underperformed.
Yeah.
And so from that point of view, I don't like to own miners. I would much prefer to get in early on explorers. And with my knowledge as a geologist, my experience in the market, pick good stocks that have a chance to double or triple. In fact, our investment or our speculative philosophy is to trading methodology is sell half when stock double, and we expect that to happen. If I'm doing my work right and I pick the right stocks, that happens in 12 months or less.
Interesting. It's definitely a lot more exciting, a good speculative play than a good some like a producer.
Yeah, if you're going to buy I'd rather buy U.S. blue chips than buy gold miners or copper miners. I like to buy companies, copper explorers that have potential to become developers and sell out to big copper mining company. So that's kind of the philosophy or the targeting that we do.
Yeah, it's interesting. One of the first books I read on investing when I was like a kid was I think it was called, I believe, the Zurich Axioms. It was written by a Swiss banker, and he said when he was a young guy, and he was positioned in some blue chip stocks. That was his first. And his father, who was much older, experienced Swiss banker, said, "Young man, you need some good speculations."
Well, absolutely. That's how we get our 2-baggers or even our 10-baggers. We got a 10-bagger on a small gold prospect generator hybrid company. We got a 10-bagger, 11-bagger, in fact, 2 weeks ago. So
which was that? Which one was that?
That was Ely Gold Royalties,
Okay.
ELY, on the Toronto Venture Exchange.
Wow.
Picked it at 9 cents in early February of 2018, and by mid-February of 2020, it was a 9-bagger, and then it briefly hit a 11-bagger, and we took some more money off the table, and we're just playing the rest. It's taken a hit, as all stocks have over the last couple of weeks, but still trading at pretty lofty levels.
Okay. Now it's a royalty play, so it's not an explorer, right?
No, and it's a prospect generator based in Nevada, so it would acquire ground and option that, 100% option that ground to other companies to explore, retain a royalty.
Oh, I see. Okay,
it's bought some royalties, it has producing royalties now, and we think it's got further upside.
Okay, interesting. Okay, so that fits into your explorer.
Yeah, 9 cents to $1 in 2 years, not bad.
Excellent. So, So again, you there's 200 to 300 of these what you consider good projects in the world. How do you determine, how do you sift through? How many mining companies? How many explorers are there? Like around 1,500, probably 2,000.
There's about let's restrict it strictly to the Toronto Stock Exchange, Toronto Venture Exchange, where most of these companies are domiciled in Canada, although a lot of them operate with U.S. venture capital, of course. There's 1,180, 1,200 now. So I would say 200 to 300 good projects. You can make a really top cut right there. And if you have my experience, or if you know a newsletter writer other than me who's a geologist, and there's a couple out there, we have a bit of an advantage because we can go right. My immediate cut is the project. Do I like the project? Do I like the jurisdiction geopolitically? Do I like the infrastructure? So a lot, of the 1,200 companies at any one time, I'll do a cut on those, and I would like maybe 5% of those, say 60, would warrant a second look by me.
Okay. So let's kind of go through the criteria. You mentioned jurisdiction, infrastructure.
Right.
What else do you look for?
Well, we do a thing with four categories. So we look at the share structure. We want companies that are tightly held with insiders controlling a significant number of shares, of which they put their own money in.
What percentage?
So they operate in the best interests of all shareholders.
Okay.
We want the people to be geologists or engineers, technical background with previous experience in those positions and successful. If they've bankrupt three venture capital companies, resource companies, or they've held on to them and rolled them back and gave them shares for debt. Those people aren't venture capitalists or entrepreneurs anymore, in my opinion. So we look at that. We look at the project. We want the right commodity: gold, copper, uranium. We'll consider other things, but those, especially gold and copper right now. Safe geopolitical jurisdiction. More and more, I'm gravitating back to the good old U.S. of A. And certainly with the Trump administration, rollback of regulations, pro-development, lots of projects in the U.S. Look pretty good right now. We've all gotten burned going far afield over the years. And so the Americas, I'll consider Chile, Peru, or parts of Peru, parts of Mexico, specific provinces in Canada. But more and more, my target areas are the U.S., not only the Western U.S., but other parts of the U.S. I'll consider. I stay out of California because it's going to be very hard to develop a project in California.
I don't know if that's the U.S. anymore.
Yeah, but it is the left coast. We know that. Alaska is one of my favorite jurisdictions. I cover a copper company in Alaska, Trilogy Metals.
Okay.
Once again, a great winner for us. We covered it in late May of 2017 at 66 cents. Last summer it hit $3.14. Had a bunch of short attacks, took it down. New York American listed right now. These are our U.S. prices for this stock. Currently, it's at a 52-week low of about $1.50, and I dare say it's buying opportunity again at these levels. Two near-term development projects in Northwest Alaska, South 32 Limited, the giant mining company out of Perth, Australia, spun out of BHP a number of years ago, is its 50-50 joint venture partner, just put $145 million into the project.
Interesting. Yeah. I think mining exploration in the U.S. has been kind of forgotten about. I didn't even know that there was some exciting projects here now.
Yeah, and there's a bunch of exciting projects and gold projects in Nevada. That's one of my go-to places. There's exciting gold projects building ounces in the ground right now in Idaho. Other than California, there's very few places in the U.S. that I'm would not be excited to go.
So you mentioned management. So let's kind of get into that a little bit more. So how you said you want them to own, have skin in the game.
Yeah, exactly.
What percentage should they own? Like, what do you like to see? What's the ideal?
Well, that's a hard number. It depends on how long in the tooth the company is. So, when it's a startup company, you probably want to see I don't know, 20 to 30% management owned as they dilute themselves out by equity raises. You want to make sure that the people they give it to are on or sell it to are on board, but they will continually dilute themselves out, but you also want them to participate in their private placements. All these companies raise money for exploration by equity raises, so that it's a constant dilution sort of thing. But even if they've been around 5 or 10 years, or maybe even 15 years, you still want to see management putting their own money in every time they do a raise.
Okay. And you basically want to see some experienced geologists with successful track record,
or engineers.
Engineers, okay.
Guys, because these are technical companies.
Okay. No, and so red flag for you would be these rollbacks, other basically promotional deals.
Right. There's a great number of these companies, especially domiciled in Vancouver and listed on the Toronto Venture Exchange, that these guys are lifestyle companies. They pay themselves a salary. We just posted one instance in a presentation I gave at PDAC, where the company office is a luxury condo in downtown Vancouver. So you got to watch out for those sorts of guys, and there's plenty of them. But it's not that hard to do your own due diligence and figure that out. And a lot of what we do is try to educate our subscribers, and we got about 7,000 subscribers, and educate them on enough that they can do their own due diligence. And every once in a while, I have a subscriber says, "Hey, take a look at this company. I didn't know it, and my gosh, that's a pretty good company. Maybe I'll just put some of my own money in it."
So I guess that's kind of one of the values of putting out a newsletter. So let's kind of talk about your some of your services, your newsletter. Tell us some more about the Mercenary Geologist.
Yeah, so the website is mercenarygeologist.com. Most of my stuff is available to everybody, but we run a sponsor model. So companies I own significant positions in, the aforementioned Ely Gold Royalties, the aforementioned Trilogy Metals, they pay a fee to sponsor my website, which enables us to be free to subscribers. Now, the caveat is we drive subscribers the newest stock picks, the newest newsletters, the presentations that I give at PDAC on Sunday. Those are all restricted. But it's easy to get. You go on the website and sign up, and you give us a name and you give us an email address. You can fake your name. We don't really care, but you got to give us a working email address. Then you get access to all that stuff. We also run a very...
So it's free. There's no charge.
No charge. I make my money through sponsors of my website, and I've got skin in the game. So rest assured, if I pick a stock, that I'm operating not only in my subscribers' best interest, but mine too. So, and that's the way it works, and it allows us great reach, because then we're able, after these after about a month, they're put out to the public. They're syndicated. So because it's free, we can syndicate to a lot of other websites in the business and get much broader reach. We also run a really robust and boisterous Twitter feed at Mercenary Geo. We have 51,500 dedicated followers to our Twitter feed, and we have a lot of fun with it. It's now I'm a libertarian. a bit of an Austrian economist type.
Okay.
I'm a big sports fan. I grew up in Missouri, so the St. Louis Blues and the St. Louis Cardinals are my sports team. So we tweet a lot of stuff, things that interest me. I like to hunt and fish, so you'll see those sorts of things on my website or on my Twitter feed. We have a lot of fun with it.
Excellent, excellent. So the subscription is free. So Mercenary Geologist, I'm going to have the link down below in the video.
I appreciate that.
People to check out. So maybe we could just like recap. Like what are your current picks like right now? What's your favorites right now?
Well, pardon me. Right now, I like Trilogy metals at $1.50 at a 52-week low. I'm not going to tell you it's not going to go down further, but that was a $2.60 stock a couple of weeks ago before all this coronavirus fear happened. We've got right now. Got a copper price at $2.55. That's
what's the symbol in Trilogy?
TMQ. On the American exchange. It's got good liquidity, a pathway to development and mining, presumably by its partner, the giant mining company, South 32 Limited. Okay. I like that. We recently covered a private company called Real Gold Resources. I stepped out of my comfort level a bit. It's in the Kyrgyz Republic, but it has a giant land position for Carlin-type gold occurrences. And that will be public very soon. We hope it's a shell right now called Rock Wealth Resources on the Toronto Venture Exchange. They're all, these are all shown on our website, okay. All freely available reports on those companies at this point.
Got it. Okay, so Rock Wealth, what is it? It's Rock Wealth is a shell right now. What's it?
Yeah, it's a shell. So the private company of which I hold shares, okay. Real Gold Resources, is going to be rolled into that shell, and we expect it to be public very soon.
Okay, got it. Okay, so that that kind of wraps it up. All right, so Mickey, I want to thank you again, and we look forward to having you back very soon.
I appreciate that, Jack, and may all our trades be to the upside.
Absolutely.